Hey, welcome everybody. It is Thursday, April 2nd, I believe, in the United States, even on the East Coast. And we are here live giving you our daily COVID-19 update. And I am Michael Lee with Reconciled. We have Chris Macksey here with Prefix Accounting, Dan Luthi with IgniteSpot, Amy Walker, CPA with Amy Walker, CPA, and Jacob Schroeder with Ascend Consulting here, giving you your daily update. There's a flurry of changes and updates that we've all been through today. I think the big one is there is the start of the CareSact SBA loan, 7A SBA loan, also known as the PPP Paycheck Protection Program. Starts applications tomorrow at some banks and lenders, but not all banks and lenders. So we are finding out that certain banks are going to be ready tomorrow to accept applications and certain banks are not. So that's an interesting update. And each of us have some comments and other things we want to update on. But Jacob, go ahead and start us off.
I want to touch on that as the SBA is supposed to open the site up tomorrow to be able to even submit these to the SBA, because while the lender's doing all of the work, it sounds like there is an SBA site that many of them are applying or sending those off to as well. Like they're not waiting on that approval back, but that website has to open up. And then obviously from talking with lenders, there's some concern of whether the SBA site will even be able to handle volume of being able to submit these back to them. And if that site crashes, then we have to pause. Now, depending on what your lender's internal system is, they may be able to intake a lot of this data and just not push it, depending on how that process is working at your individual lender. You know, some lenders have built their own system that will intake these and then submit them off. Others are going to go direct. So I think that's an important thing to consider there as well. But to that point, the SBA has not issued official guidance or final guidance on this whole bill. They've issued some to the lenders, but not complete final. Which means some lenders are willing to start moving ahead, making some assumptions and probably gathering maybe a little additional information than they think they'll need. That way, hopefully they can process with that final information. But so depending on your lender will matter if we're moving forward tomorrow or if they're holding.
Well, and banks don't even know whether or not they actually want to even service the SBA loans, because 2 days ago, the Treasury was changed it and said, oh, well, we should do a 2-year term at 0.5%. And all of the banks are like, we're not interested in that really, because we don't actually have the money to do that. So what are you going to give us the money to be able to lend all of this out? And the Treasury was like, why would you need that?
3 to 6 weeks.
3 to 6 weeks.
Personal experience today with 2 of my clients. One of these is a local Houston bank and had a relationship with them for well over 20 years. They sent us the paperwork and what they were going to need filled out, said fill it out and email it back, and then we'll take it from here. So that bank's not going to have a portal or anything, but they're getting ready. And then a bigger bank, you know, I've heard, you know, check back tomorrow, the link will be available. So I've had 3 clients ask me, should we get up in the middle of the night and see if it's available before everybody starts hitting it? I mean, what do y'all think about that?
I have a feeling most banks are not going to be, it's not like a movie premiere where people line up at midnight on Thursday night and they get their ticket for the Star Wars opening. I think most banks, my hunch is most banks will not have something up online by tomorrow. The fact that you have a bank that said send your information, we'll take care of it, means we have it on our desk, and when we know guidance, we'll submit it. So maybe you're on the top of their stack, but very few banks, even the largest banks in the country that do the most SBA applications and loans, know very little or are not telling their customers really much at all. So it'll be interesting to see if they're ready by even midnight or even ready to take a real application tomorrow or have their own list of applications and requirements tomorrow. It'll be interesting to see.
My favorite, I've been asking a couple of banks about whether or not they're going to be ready for this, and my favorite response out of all of them was this one. And this is verbatim, okay? When asked about whether they're going to have an online form for this. We are working with our web page technology vendor to ensure that we have the widget available and operational in time. Their web page technology vendor to make sure that we have the widget. I don't know if he's talking about his economics class from 1962
Oh, I
or
knew
a
he was gonna start
website.
throwing back years. I just knew it was a matter of time when he started throwing back years.
Was their bank website built on WordPress? And they're talking about the widgets you add in WordPress. Is that what it is?
Yeah, it's a tripod locos website.
I think the one thing that's really interesting about this too is but I will say this. I mean, there has been a few banks that I've connected with, that have been maybe more regional based, but they're being really proactive. I mean, I'm seeing a lot of email communication going out to clients requesting specific information, not just general stuff, not requesting like, let's make, article incorporation. I think that's one of the value pieces that may be coming from some banks also, is by them saying, we're only working with people that we have as customers currently. They already have your articles of incorporation on file. They already have a core group of your information. And so it's not 10,000 things that you need to gather. It's just, let's confirm the payroll details are matching and mapping up correctly. And so I think there's a little bit of cool value from that standpoint in creating some simplicity there from that piece. But I will also say, for people who are used to using very local banks or things from that nature who don't have that system set up, a little bit of complication trying to find the right resources to be able to work through it. And I think we're all seeing quite a few little fintechs spinning up some connectivity to try to I guess you could say birth into that space for a minute to collect a few dollars.
Yeah,
To develop their own widget.
Yeah, develop their own widget, because truly from most of the fintechs that I've talked to, they're just a thin client that is connecting to a bank that actually does SBA processing. So a lot of them are not truly the one processing these loans. They're just connecting into a backbone of somebody else's, and they're likely collecting the agent fee. So if you go look at the fee structure that the SBA is paying out, they're paying the lender a certain amount, and then out of that, the lender then would pay an agent fee to somebody. So a lot of these fintechs are just spinning up an intake form in reality that will pay them the agent fee to move on. And that's why you're seeing a lot of them spin up. So the question is, who has the biggest backbone is going to be the vendors you want to use, and who are they partnering with, which I don't know if they're openly disclosing that yet or not, which will be the interesting thing as this goes along on how that's working. And even I think some of your smaller banks are going to partner with a larger partner that does a lot of SBA lending that probably none of us have ever heard of, but is that backbone for the banks to push that through.
I think one of the things I've seen with a few fintechs that have come up in the last little bit that were very surprising today to see pop into that space. We saw some come from Divvy as one of those, and CorpNet was another one that I know that a lot of accountants use from that standpoint. They're giving very specific instructions on what you need to have ready and supply for. So my hope, of course, with that for those clients who are looking, potentially connecting with those type of providers, is that they already have communicated exactly what those banking backbones are requiring for those people. So it makes it a lot easier to, again, streamline and simplify it. But I will say, and I do agree with this from that standpoint too, is you're probably going to see a little bit more lag in those ones getting done as quick as some of the other banks, because their purpose, like they don't have all of the account information set up like they do at an actual regional bank that you work with on a regular basis. So there may be a little bit more of a delay in working through that process. Also, I think we're seeing fees that are coming with those that we didn't see from some of the other banks as well. Some more of assistant-based fees that are coming through that people are, seeing and as they progress with that. But also, I think along with that too is the thought that comes to my mind with those is that hopefully they're able to actually service all of the people who are going to be going down that road. That's kind of one of the fears that I have is that all these people are coming and jumping and trying to get into the pool to gather $1 or something from that standpoint. And my fear is people are going to be left with their application still sitting on someone's desk and never actually gets pushed through for 2 or 3 more weeks. And hopefully there's still money available when people are going through that process to be able to do it. And I guess the last thing I'd comment, it just popped in my mind with this too, is I am seeing with a handful of lenders also that they're capping or they're putting limits on how far down they'll go on those lending amounts. So if you're, in some cases, if you're not over $100,000, they're saying we're not helping you, even if they are your standard lender. To Chris's point, when we first started, that may be associated with the amount of money and profits and proceeds that are available to them. Maybe there's some risk with those smaller companies in comparison that people are kind of negating that piece. But I think that's an interesting enough conversation point to bring up also, just kind of determine what everybody else is seeing with that too.
It's truly lovely small business relief.
Yeah, but to that point, Dan, I think some of the reason you're seeing this is even though lending ratios were relieved in the CARES Act for some banks, they weren't for all of them. And some banks, just knowing that the SBA loans that they already issued, they're 7As, now they're not going to get payments for 6 months potentially. Well, the SBA is supposed to pay those, but what's that lag time going to be? They're deferring a lot of loans, so they don't have cash coming in from that standpoint. How cheaply do they want to give cash away? And what can they do that from the ratio standpoints when they are having a mass amount of people walk in and say they want a loan? So, I mean, at the same time, if you're working with one of those lenders, you want your lender to remain strong. So as much as we want that to drop down, I also understand why some banks are taking the protective measure of saying, maybe we shouldn't serve that low of market to protect our ratio standpoints, but we're going to serve our bigger ones. Now, I think you're also going to see some banks that'll handle everything just as a pure marketing strategy. They're going to go out and look at it as a customer acquisition opportunity. So they're willing to lose money on these loans because at 0.5% interest, they very likely will be losing money, right? Yes, the upfront fee may or may not support servicing that for 2 years, especially if they're paying an agent fee on those smaller loans. But they can also look at it as an acquisition opportunity for new customers or a huge customer service move to their existing customers that really solidifies themselves there as their partner in that. So I think that's important. Something I would like to transition to is let's talk through maybe the documents a lot of these banks are requesting, just as we know this is coming online tomorrow. Not all banks have presented these lists out. And yes, there is some variation on these, but if you want to be ready to go tomorrow, whether it opens up or not, or whether it's going to be Monday, whatever that looks like, to give people an actionable item where they can go and start gathering some documents today, I think would be a great thing to touch on.
Yeah, so if you look at the guidance from Treasury, from the SBA, and then probably one of the better guidance documents and easy to read from the U.S. Chamber of Commerce, is how do you calculate the PPP loan max for that you want to borrow for tomorrow. So that calculation is the past 12 months of payroll, and the application itself on page 3 says the 2019 payroll for the year. So you can safely take 2019's payroll that you spent, payroll costs, which include your salary, wages, payment on cash tips, and vacation and sick pay payments for insurance for that year, retirement benefits, and state and local tax assessed on the compensation. So anything on that list for an employer and so that would be for tomorrow. So you take 2019's total wages and payroll costs that fall into that definition, you divide it by 12, then multiply it by 2.5. That's one of the safest definitions for it that the chamber has put there.
I will say there also is some excluded costs down there. So if you scroll down, there are some things that are excluded. And something I want to note in here, obviously compensation of any individual over 100,000 is excluded from that. The payroll taxes that are excluded there as well. Just be aware of that your employees' FICA and federal income tax would be excluded from that, pure the way many banks are looking at this calculation and the way it's written in the bill, because it says withheld. So those would be excluded, which is not a typical wage calculation. So that's why I want to point that out. Many of us grab the raw wage calculation. That is saying it would reduce that. So I want to put that exclusion out there and say, be aware of that. Because I think the last thing any of us want to do is someone go in expecting a lot more money than they're going to get, right? So I'm being conservative here and saying, know that many banks are going to be pulling that out. There are also the interpretation that could be a little more aggressive on some of these things, right? And include additional payments. Most of the time we're saying rely upon your bank for that, on what they want included, because it's going to be a bank by bank and how they are interpreting these until the SBA issues further guidance on that side.
I think that, when we first were all digging through this last week, the calculation was different at the time. It's worth repeating because a lot of people tried to get started early. The fastest way to get this number is to go to your annual payroll report. Chris went over that, I think, yesterday. Pull that annual payroll report. You might have to do a little crunching to get your state tax rate, but you can easily identify any of your employees who are capped out at 100,000. So that puts them in a pool. Pull out gross wages, not total employer cost, like Jacob just said, just your gross wages. And for most small businesses, if you hit that, if you hit tips for restaurants, maybe some of them have health care, and you get your state taxes, you've got the bulk of it right there. But look at the list and make sure you're putting everything in that's listed. But I'd be conservative. I wouldn't try to add extra and ask for forgiveness later.
Yeah, and some people are getting confused about like the mortgage and utilities and rent expenses. Those don't have anything to do with this calculation. Doesn't have anything to do with like how you come up with your loan number. That comes into effect later on when you're looking for the forgiveness.
Yeah, that's what you can use the money. Once you get the money based on payroll, you can use it for those things. So it's step 2. Also on the PPP application form, after you've gone through taking the time to calculate your average payroll and then done the simple 2.5 math, it asks you for, what's the exact wording? Jobs, what is it now? We were just talking about it. Number of jobs. And that's all it says. Right here, yeah. So let's start a discussion on what you would put there. Would you put FTEs? Would you put normal number of positions open in your company for the year? Total, what would y'all do?
So I think one of the things that's super important to clarify with this is, as accountants, we think of jobs as like projects or things that you're working on. And so like our mind shifts to that. We have to remember this is a paycheck-based program. They're looking for people counts. This is 100% a people count calculation that it's looking for. And so, yeah, I would say the number that's listed here is that full-time equivalent of an employee number. I'm assuming there's some sort of calculation. They're rating off what your average payroll by those individuals to determine some sort of calculation internally from it, or if there's a reduction in what those numbers of jobs that are currently available in the organization now within that from that standpoint. But I'm also seeing that there is some banks that have been asking for your average monthly employee count. And so even if you put your current number in this field, they would be following up with you after the fact on seeing what your trend has been with that full-time basis over time.
Well, I know on the Texas unemployment form, and it's probably this way to every state, you list by month your number of employees. And so you could easily grab those numbers and calculate an average for the year.
Yeah, and I think this one's interesting when you think about the forgiveness side, because they're comparing full-time equivalents. So my guess is on this application, since it's not in the instructions right now of actually calculating that out as a full-time equivalent, they want bodies. But no, from a forgiveness standpoint, you're also gonna have to calculate full-time equivalents, which the SBA will have to issue guidance on what equals a full-time equivalence, because there's multiple standards for that inside the IRS code now, depending on what portion you're looking at. So I think from that standpoint, number of jobs once again, we're going to rely upon our bankers on what they want there, because different banks may want different things. And unless the SBA issues official guidance, remember that in the bill, it delegated the authority of the lending down to your bank. So I think we can all say we expect the SBA's guidance maybe to not be complete tomorrow, and some of these decisions have to be made by a bank with official guidance coming further down the road. So we're going to say rely upon your banker in this and figure out exactly what they want there, is what I say. But know that you're going to need those total number of jobs to start thinking about what that is.
You were asking about required documentation. I thought I'd just send from that banker I was telling you about earlier, who asked us just to send one completed package. This is what she told us: the completed and signed SBA application, which we were just looking at, beneficial ownership certification, which she sent us, and then for payroll documentation, she gave us a list of things that would suffice: W-2s for last year, proof of tax payments from either if you submitted them yourself or used a third-party tax service, all quarterly 941s, annual 940 that was due this year by January 31st. And in the case, if you are a self-employed individual, they want to see your quarterly 1040 ES, your estimated payments. Other than that, that's what she listed. And again, this is somebody we've been banking with for 20 years. So they have our articles of incorporation. They've got all of our things like that. So this is what she said to put together for this application.
So two things I have heard otherwise was monthly payroll costs for last year. So they wanted them by month. And I'm guessing that may be related to some full-time equivalence calculations that are just spread out of that. Is one thing there. The other thing I've heard several banks discussing was requesting a tax return. And the reason for this is not to prove repayment ability. It gets down to one of proof of ownership, as well as along with your operating agreement, but it makes sure, like at least 3 months ago, nothing had changed compared to what you're doing. As well as looking at on a Schedule C how the owner was compensated in there, since those are net self-employment earnings. So depending on what type of entity you are, there may be some additional things in there that you need as well. But the rest of your list is pretty close to what ours was, Amy. The one thing I will say is, if your payroll provider does not show the company portion of healthcare, because I know some of them don't want on a summary statement, they're going to need to know what that company portion of health insurance paid was. They're going to need to know what that company portion of retirement was. If your payroll provider is not including those on those statements. So there are some additional things that could be required from that standpoint that's not on your payroll summary, depending on who your vendor is that you're using for that.
Yeah, if you are on a PEO or you use leased employees, you're going to want to get a special report from those organizations. If you're with a PEO, you're not going to have any 941s, right? So you're going to want to get a letter from them outlining your agreement with them and how the reporting works. And then you're going to want to get the reports from them or from their online platform in regards to your quarterly payroll reports and your annual payroll totals.
And I'll say once again, some of the fintechs or some of the people who are completely automated that Dan talked about before are trying to do that might not be a good as fit for you if you have a PEO, because you're not going to be able to upload that 941s that they want for you, and that their system's going to be checking and saying your application is not complete until that's uploaded. So you may need a more personalized touch relationship for those as you're going that route, so think it through that too in your individual situation and where you go there.
I think the same thing it's important to consider with that also is if you've switched payroll providers last year from one to another and it doesn't have a super clean transition period, would definitely be recommending that you have someone that you can provide that to and give the backstory as to what's going on. We've had a few clients who've transitioned from a regular standard payroll provider to a PEO, And it's very different in documentation on what's expected and what's required as you're going through that, or how you process that, as well as for owners who may contribute to themselves wage less than the 100,000 mark, but also take distributions that may put them over. What type of documentations and records you need to keep on that to be able to make sure that it's covered. And I know that I've seen a few situations where part of their distribution is paid through their salary within their payroll provider. The other part is taken through a manual paycheck and a secondary, you know, through QuickBooks or Bill.com or something from that standpoint. Adds a little bit of complexity to making sure you're auditing that correctly, but definitely something you need to consider as you're going through that process as well. I think the most important part to me is, as I'm looking at, as we're preparing to apply for all this stuff tomorrow, because ultimately right now, we don't know 1,000% for sure if what we're submitted or what we've provided or what we've checked the boxes on things right now are accurate for each bank. But just know you might have to be flexible tomorrow.
We don't know. We're not 10% sure.
Yeah.
What we're about to provide tomorrow.
Yeah.
Definitely. Or what they want.
I do have.
You're assuming there's going to be a place to provide it. I hope you're not disappointed tomorrow. I mean,
Definitely.
You know.
So I do have one other thing that I want to point out that nobody's really touched on. And that is, if you filed for an EIDL and you're expecting a $10,000 payment in 3 days, make sure you let your banker know that, because we just want to make sure those programs play together, and we don't want anybody to get in the situation where, because they get that and it's not calculated on the other side, that they're in a risk of any sort of thing, right? So those programs play together, and you can apply for both. You can get the $10,000 and you can still get a PPP loan, but those do have to interact in that way. And the lenders are going to need to know that information, that you're expecting to get that or that you have received it. As of now, I have not had a client receive one yet, and I know some of them applied. But the lenders are going to need to know that information. Just so make sure you tell them if you have applied for the EIDL and you are expecting that advance or not, just so they can mark it and record accordingly.
And if you're thinking about applying for the EIDL, it's at this point, like it's kind of, and you're doing the PPP, it's like pointless at this point. So the turnaround time theoretically is about the same amount of time. So at this point, applying for the EIDL and doing the PPP isn't going to really have any impact on their turnaround time. Should be between 24 and 72 hours.
Right, and we're hearing that the EIDL may not get in people's bank accounts in 3 days. Unsure if that's true or not, right? But depending on who you talk to at the SBA, some people are saying that might take longer just because the max amount of them that they've had requested. So, which is why I'm stressing, like, tell if you applied for it, because you may be getting it and haven't received it yet, and that may impact something on the PPP side. But if you're going right now, the lender can process your application same day. That doesn't mean they're going to fund it same day, but there should be a pretty short turnaround on that funding side. So you're likely looking at the same turnaround time either way, and you might as well just go with the PPP route.
Yeah.
Also want to throw out there on that EIDL, we keep saying $10,000, but that $10,000 is an up to $10,000. It is not you are guaranteed $10,000. So the SBA, using a calculation that has not been disclosed, is determining how much of that $10,000 you get. Much the same as the calculation for how much of an EIDL you would get, you know, an actual loan. We're not sure how they're running that calculation. It's supposed to be based upon economic need, but there is not a clear, this is the calculation for how much your loan will be or how much your grant portion will be. So just know that. We're reiterating that so no one comes and says, you guys said I was getting $10,000 and $1,000 showed up in my bank account, or $10 showed up in your bank account.
Yeah. You're not sure if it's a refund from Amazon or if it's your EIDL loan.
So just putting that out there, we do not know what that calculation will be. Be aware, it's not going to be $10,000 for everyone.
I feel like this is the perfect opportunity for the magic 8 ball to come back into play, where like you can shake it and see when you're going to get your EIDL money.
And how much it is? Like, how much am I going to get? How much?
When am I going to get my EIDL loan? Check again later.
Well, any other
Will we be
updates?
able to file tomorrow?
Any other updates
Nothing?
before we head out? And I know everyone's busy as well as people are watching. Any final words before they prepare for April 3rd, the big day?
Once again, we hit on it last night, but look at the fact and say, should I be doing PPP? Just because the media and maybe that's what all the hype's around, that might not be the right answer for you. So talk to your advisor. You know, there is the EIDL program. There's the employer retention tax credit that is more favorable in some cases than the forgiveness on a PPP loan. So just understand what that looks like. We talked a lot last night, and I got a lot of feedback that they really liked it on the fact that maybe unemployment's the right answer and laying your employees is the right answer instead of going into debt. So really think through those things and really consider them before you go and apply.
So I just want to make a comment. I just received notification from someone that the interest rate on the PPP loans is not going to be the 0.5% that they came out with. It's just breaking. I'm not sure exactly what the new rate is going to be, but make sure that you're looking at that in preparation. We know that they said there was a max of 4% that it was supposed to be at. Oh, they're saying it's about 1% now, but it's still higher. I'm assuming that's probably kickback from banks wondering why they're charging such a low premium on these types of loans. But again, going into all of this for me this has all been a whirlwind over the last 2 weeks for everybody. It's been crazy. There's so much information swirling around, so much translation that's coming and going and things from that standpoint that we need to be watching and being prepared for. Go into tomorrow as you prepare for file for the PPP to just know that it's a loan. That's the anticipation of these, is to help you to be able to grow and to be able to maintain your business. And if if you need it, you're going to be able to get those monies and resources from that standpoint. But also focus on the need that you actually need from that standpoint to stay viable as you're working through it as well, and think about the other loans that are available in the marketplace also.
I would say mine would be don't get your hopes up. There's a high probability that the banks and the US Treasury and the SBA all get into a fight over this, and it might be a couple more days before we actually see them opening up to lending. The article that I was reading from Fidelity Investments today did not paint a particularly hopeful picture on it being opened up tomorrow. So yeah.
I say everybody be patient, get your patient hats on. Remember when you used to have to register for classes and you just keep hitting refresh, or in my case, redial. Just be patient tomorrow. Have your stuff ready to go, and it'll happen. It'll happen.
So before we go, my God, I do want to throw something around here. And this is where you're going to see some just pure debate from us because we are getting mixed signals from your bank here. And I want to address this one because I've had many customers reach out to me that different banks are saying different things. Different accounting firms are saying different things on this. And I'm just going to put this out there that this is an open question of, are independent contractor payments included in your payroll cost or not? And you see Chris's head go like that. And I think the important thing for us to say is, right now, rely upon your banker. If they open up tomorrow, they are going to make that decision for you on what they feel comfortable with. But would love your guys' thoughts. I'm going to be completely honest. Like, we get a calculator that came out yesterday from BDO, the 5th largest accounting firm in the world, that says, oh yeah, independent contractors is the line there. Let's calculate with it. The AICPA comes out with a calculator yesterday that does not include that, right? So what I'm going to say is there is some places in the bill that are open for interpretation And without further guidance, I don't have the answer to those, but I love your guys' thoughts on that portion of the bill, just because I know a lot of clients have been asking about it.
I would say that if you're going to consider that as part of your loan, calculating your maximum loan, that you should definitely plan on paying that back, because it is murky, and they don't even use the same definition for the independent contractor in all of the spots where they reference it. So, and the box that they draw for the exact type of independent contractor is not great. I mean, I look at it and basically I don't know the exact wording for it, but it was like, it's like if the independent contractor's sole income is from you as a business.
And I think that's on the forgiveness piece, and that's the interesting thing, because on the actual loan calculation, it says payments to or income derived from, but payments to would be an actual payment to an independent contractor or sole proprietor. So, and it says or sole proprietor in there, which makes that a really murky area. And the only reason, normally, like, we try to give you more solid advice here, and I wanted to touch on this one to say, you know, just because two different banks are telling you two different answers doesn't mean one of them's wrong and one of them's right. It means nobody knows the answer. And I think that's the reality we live in, right? And it's the reality that we're going to go with. And I'm going to make the call that some banks may issue loans under one standard and another bank may issue them under the other side, as we move forward here. And that doesn't make one right or wrong. That makes it mean there is no clear guidance. But at the same point, I hope either the SBA issues that guidance soon, or the banks issue despite not having that guidance, because I think we can all agree that there are many of our companies that need this funding sooner rather than later.
I think there's going to be, I'll say this, in some cases, ambiguity is going to be people's friends. And in some cases, ambiguity is not going to be people's friends, with as much work as they may have to put in for tomorrow. And so to that, I mean, just as everybody's, you know, noted on, being prepared is the best we can be. Just make sure you gather as much documentation as you can around all these areas, looking at all the resources that you need and keeping it consistent.
And to Dan's point there, I've told my clients to put together a list of independent contractors so we can hand it to the bank if the SBA comes out and says those can be included. That way we're ready that much faster, because it doesn't hurt to put the list together and not need it. But if you're sitting there waiting, you don't have it, you may be wishing you did.
Well, thank you guys for this riveting update. And looking forward to talking to you guys tomorrow and to hear more news as we all interact with our clients, the banks we interact with tomorrow. And also, you know, everybody watching, keep your prayers and thoughts for those across the country that are suffering with impacts of COVID-19 coronavirus, and be at home and healthy and safe. See you guys tomorrow.